Good morning, it's Jeffrey Cohen. It's Thursday, October 6th. We're going to talk a little bit about market noise. Registered, but ignored in our fund. But I want to talk to you about it because it made me... So market noise, that's actually a really good term. It came to me in a video. By Yahoo Finance. It's just a good term. It's like haptic recon from William Gibson. So market noise might be throwing investors off in the fourth quarter. I have no idea what they're talking about. I haven't read the article. But whiplash. Distinguishing true signals from noise. Right? Noise. Noise, noise, noise. So the question is, what do they mean? And what do we mean when we talk about noise? So we do a bunch of research, and I'm going to show you what we're finding. So noise is bad. We measure noise. Actually, that's how we pick our stocks, right? So if you look at the overall markets in the last year, just remember that the markets are down. The S&P 500 is down 11.5%. Now it pays a 1.3% dividend. Maybe it's up to 1.4%. So it's a 10% loss of capital. The Russell's down 20%, doesn't really pay a dividend. The QQQ is down 19.8, pays about a 1% dividend. So you lost about 18.5 to 19%. So markets are down, but that's not in and of itself a bad thing, right? Because new money coming in the market maybe earns a higher return. This is what we watch. We watch the variance. So we use the SPDR, the SPY. It's an index ETF, and you see the variance is 3 zeros and then 195. So that is that's actually 2.0 times 10 to the negative fifth. I want you to remember that. That's important. 2.0. When we look at the stocks that actually we ran last night, and these are the stocks that pass a market threshold of $1 billion of market cap. We assume a risk-free rate of return of 3.5%. We have a market index floor and ceiling of 8.5% to 20%. Price limit, it's got to be $1 every day. It's got to close over $1. Daily volume's got to be 50,000 shares, right? So 11,054 shares traded. 11,054 shares traded. The number of shares that made it through our intense data validation, traded every day, positive beta, all this stuff, right? Make sure it's liquid. 1,285 stocks, okay? Those are the profitable stocks. The profitable stocks had a 2.2 times 10 to the negative 5 variance. So the first thing to notice is it's only 10% higher than the SPDR, which should be the most efficient, right? Because this is an equally weighted think of it as fund or think of it as index. It's not market cap weighted. So this would say that the S&P 500 really effectively has no benefit. But if we look at the money-losing stocks, these are the stocks of the companies that don't make a profit. On this one, we have a market cap threshold. We want to catch the $1 billion stock. So we have $999 million market threshold. Still, minimum price of $1. Daily volume could have less. It's 35,000. Because we want to pick up a few more stocks, right? Some of these are just, they're so bad that we want to catch them. And you'll see here with tiny, slightly less rigidness. Again, 11,054 stocks traded yesterday. 445 made the cut. Of those stocks, you're at a 6.4 times 10 to the negative 4 price variance. Okay, so that's high. First thing is, that is 3.2 times higher than profitable stocks. Okay, so unprofitable stocks have 3.2 times or 320% higher variance. This is closing adjusted stock price variance than stocks of companies that are profitable. So unprofitable stocks are very bad in this economy right now in terms of the stocks. But the thing I want to show you, right, what's this market noise, right? Market noise has increased. And then we're going to talk a little bit about the stocks today, but let's just finish the thought here. We manage on our website, chicagoquantum.com, Variance. Stock price variance through October 4. So I just shared it with you what it is for October 5, but here it is through yesterday. And if you look at when we started tracking stocks with positive income, it was 1.4. Now you remember it got up to 2.2. So this is much higher. All things being equal, from May to October, the variance of profitable stocks is higher, which means your expected return has to be higher, which means your stock price is lower relative to fundamental valuations. The higher this number goes, the lower the stocks go. I don't care about your trading strategy. Is how it is. Negative net income stocks used to be 4.3, and then 4.2, not bad, 4.3, right? Hey. But 4.3 is now 6.5. That's 50% higher. So your risky stocks pricing is 50% lower if you assume rational investor behavior. Okay? If you look at the S&P 500, it was 1.2 in May. It was downright sleepy. And when we first started running the model when the market was going up, this was 10 to the negative fifth. This was like 9.0 times 10 to the negative fifth. And so now you look at it and you're at 2.0 times 10 to the negative 4. This is extremely much higher, right? It's 0.8 on a 1.2. It's 66% higher variance for the S&P 500. So what that means is either, number one, there's a lot of market noise baked in because people are trading the S&P 500, or it's just that much crazier. And so there's a lot of market noise. And so until this market noise comes down, you're going to see a falling bear, bull, bear market craziness. That's what we see. I wanted to share that with you because market noise, we got it in spades, and we measure it every day, and it's crazy talk. In fact, you could look at particular stocks. This is kind of fun. So let's look at our downruns. Downrun's fine. We'll look at our downrun stocks. Okay, we'll take a minute. We'll pretty it up for you. Let's look at the formats. The first thing I want to do is downrun, so it's red. We're going to freeze our header rows. We're going to set up 3 header columns. We'll freeze those. By the way, you buy your run, you get this. You do your own analysis. Let's look at variance. This is variance versus the average cost. This is a normalized variance for every stock. This is the 454 stocks of companies that lost money. And let's sort them in descending order. So Bridge Biopharma has a really high variance, and so does Peloton, and so does Carvana, and so does Affirm. So if you want to look for stocks that are just going to move all over the board, this is what you got, right? And by the way, there's others. We'll bold them for you so you can see it. There's Marathon Holdings. There's Robinhood. So in my mind, it's not that these are bad stocks, but these are stocks that are just trading like crazy. Crazy. And now when you look at things like volume, so Carvana, volume is up. So you might say, okay, and Ginkgo Bioworks is up. And Marathon Digital is slightly above average. So in a down light liquidity market like this, stocks that are trading above their volume or even at their volume, this says something. And now let's take another look. All these stocks are trading really low. So high volume stocks with tremendous amounts of volatility are going to go down in price. It's just what it is. This is just facts. I'm not making this up for you. So I want you to think about this as you're trading today. When you look at stocks that are very, very high volatility, high volume, you're going to expect to see the prices are lower, and it doesn't mean the prices are now going to suddenly go back up again. They're just lower. Because people don't want to hold a stock that is so volatile. They want to sleep at night. They want to make money. They don't want to ride a roller coaster. There are some kids who want to ride roller coasters. I love it, right? You go to Great Flags. There's Six Flags, Great America. Get all the roller coasters you want. But most people don't invest billions of dollars in the stock market for a roller coaster when you can pay like $60 and ride all the roller coasters you want. So that was my market noise discussion today. I wanted to do a quick video and share that because I think it's important. By the way, we look at this stuff like all the time. Like this is what we do. And so I just want you to think about it, right? There's a lot of stock market volatility, price variance in this market. I'm just going to leave the homepage up so you know who we are, and then I'm going to take a look at something else. So where are we with the stocks, right? And where are we with our fund? Jeffrey, how's your fund doing? You know, I know you're paper trading a fund. It's called the Chicago Quantum Net Score Smart Volatility Fund. It's pretty interesting, actually. I am not going to share, if I can help it, any individual stocks that we hold or that we're thinking of buying and selling, because that is not what we're about anymore. We are... By the way, it makes Twitter so much more not to be out there pumping the stocks I hold. I'm like in withdrawal. It's for Yom Kippur that I did it, by the way. So right now we're short 3 stocks in the model: Snap, Everbridge, AMC. And so it's interesting, right? Those 3 stocks, and then we also have a beta-weighted hedge of the S&P 500 short versus the longs. And the longs, let's see if I can get them all on the screen. There it is. From VRT to AMD, they were all down yesterday, except for 2 that were up. It's just interesting because these stocks, look at the industries: chips, e-commerce, advertising, money management, Bitcoin, legacy retailer, e-commerce retailer, chips, mortgages, surgical equipment, lender, like private equity to Bitcoin, chip company, tech company. I actually don't know what Vertiv does. And so this is what the market wants us in. It's a mix of high beta, high risk stocks. So let's take a look at where we are this morning. Jeffrey, how's your fund going to do today? Well, let's take a look. How is it going to do today? Well, if we look at the pre-market, and by the way, I'm not giving away any inside baseball secrets because I'm not sharing with you the favorite run today. So this is yesterday's favorite run. So if we look pre-market, it looks like one of our dogs is going up, 2 of our hedges are going down, our spider's going down. So we will make money on our hedge. And then, most are down. The key is, does our hedge go down enough to pay for the loss in some of our stocks? And lately it has been. That hedge has been what's making the money for this fund. So what else is worth looking at? So we'll take a look at the futures, S&P 500 futures, right over 5 days. And you can see S&P 500 has really tried to rally. Really has. It's pretty darn healthy at 37.75 though. It's looking a little frothy right now. Up. You see Nasdaq's down 0.4. The Russell's down. A lot of times we'll look at different metrics. We'll look at world indices, see where people were. When we went to bed last night, China was down. Mainland China's been down a lot. So, the other big market, right? China, down. Hang Seng, down. Nikkei's been doing great. Nikkei's up because the Japanese government's been defending its low interest rates. Of course, when there's arbitrarily low interest rates, 0.25% yield on the 10-year in Japan, you're going to have a strong stock market. It's just the way it is. But Europe is down. Hardcore Asia's down. The small markets in Asia aren't all down. Jakarta, held tough. We love Jakarta, by the way. We love Indonesia. South Korea was up. But it's tough to know. Malaysia's, down a hair. What's it we're talking about? The VIX at 29 is kind of in the range. The VIX has not been crazy. See, the VIX was higher. It's come down. So not a lot of fear in buying the insurance that you might need. So, and then let's take one last look at something I like to look at. Two things. Finviz, and then I got to go. I'm so sorry. So if we look at just overall futures, right, copper's at 350 again. Copper's strong. There's no recession. Recession has been called off until further notice. Oil up to almost $90, right? Brent is 93. West Texas Intermediate at 87 1/3. And take a look at those bonds, 126, 112, 107, 102. This is saying that yields are going up for everything but the 30-year. And the 30-year yields are going down. But that also could just be a supply and demand thing. So we're going to take one last look at pre-market 30-year treasuries, 10-year treasuries. This is so important. You should have this up on your desk all day. Bond yields. Because this is what's moving the market today. It's not whatever Warren Buffett says. It's whatever Chair Powell says. And whatever the market thinks it's going to say. So 30-year treasury bond at 3.75%. Yeah, we're not quite at the high of 3.8, but we're getting back up there. 10-year, 3.76. Look at the month. Yeah, we haven't quite come up again. So my guess is as quantitative tightening kicks in and they start retiring some of those 10-year notes, you're going to see the price go down. You're going to see the yield go up. You'll see it. Because what's going to happen is they're going to take the paper and they're going to sell it back into the market. It's going to drive the yields up. They haven't even started quantitative tightening in any real factor. And look at the 1-year treasury at 4.175. And there's one more to look at. It's the just call it like liquidity is king, right? The 1-month treasury at 2.72. It's high. It's high. So people are... What's interesting, because this would say they're driving up the yields on the 1-month treasury. There's not a flight to quality and flight to liquidity. It's just a place to park your money and earn 2.75%. I mean, that's just sweet. Right? I'm a bank. I got CDs. I've got different products, savings products. I should be paying about 3%, almost 3% yield on my money. That's nice for savers. So this is not a scary number. This is a good number. 1-month treasury at 2.7. Right, that's a good number. That's safe. That's a safe market. And now you're at 3.75 on a 30-year, 3.76 on the 10-year. Yeah, those are not lower. Those are higher. And so, all right, I'm going to leave you with the thought. Have a great day in the market today. If you like what you heard, we do not get paid to make the videos. So I ask you, please subscribe. Drop a comment. Tell me you liked it. I really appreciate it. Every once in a while somebody says that. It makes me feel so good. I do the videos for myself and for you. And we are registered investment advisors, and we are opening up a fund. We are market testing it. We are setting up the processes and procedures. We've hired a custodial firm to do our custodialship. We post blogs all the time on it. We talk about exactly what we're doing in our fund. Now, of course, once we start running live client money, we're not going to be quite as forthcoming. But for right now, you need to know what we're up to. And it's good. You should know. And so I'm very excited that we're doing this market test and we're moving forward. So thank you very much for watching. Have a great day in the markets. You take care now. Bye-bye. There you go.